Chris, Harvey, wondering how you're reading the market's kind of not just the day-to-day twitches in the indexes, but just the fact that we've been kind of spending so much time in this zone. We got to the levels of today back in late January. This correction's been in place for a while. Is that a net positive showing resilience, or do you think it means that we're kind of using up the buying power just to stand still?
Mike, I think it's a net positive. But there's still a ton of uncertainty, and that's what you see. The market can't figure out what it wants to do. One day you have some positive headlines, or you think you have positive headlines coming out of Russia, Ukraine, and the next day you hear the exact opposite. And it's just really difficult to handicap at this juncture. So I think our conversation with a lot of clients is you don't want to put on a ton of risk. You don't want to make too big a directional bet, and you don't want to commit too much. But overall, to answer the question, I think it's a positive that the market's able to churn here. We were thinking the market would have a 10% correction. We got that. We're beginning to put some money to work, but tentatively.
Putting money to work where, Chris?
We're really doing it. It's not so much a particular sector, but it's more about a style. We want companies that have really clean balance sheets. We want companies that do have secular pricing power, and we want more of those GARPy type companies. So we run a model portfolio. It's called the Signature Picks portfolio. And the two recent additions to that have been Nextera and Danaher. And those really fit the bill. They're more GARPy type names that were beaten down, that do have some good pricing power as we go forward in time.
I was interested to see that you recently also waded into small cap growth, which essentially, really peaked about a year ago. And so it really preceded the overall market correction, got beat up, lots of unprofitable companies. What are you finding there in terms of a tactical opportunity?
So Mike, that's right. As a matter of fact, a year ago, we stepped off that trade. And there's been a tremendous amount of underperformance, a tremendous derate. And that was one of the things that we looked at. The other thing that we looked at was that we've seen short interest go higher. We thought that's a positive because that's scope for short covering. In addition to that, these are more domestically oriented names. And the last thing is we went within small cap growth because we're beginning to believe that we're heading into a stagflationary environment, and this is much more constructive for growth than it is for value.